Hey there, it's me, Curiosity Trader. Hopefully having a great trading week so far. This video is going to be kind of different. Just going to go over the best trading setup for beginners. Again, every video I do is for educational only. Don't take nothing for stock advice. Always do your own due diligence, okay? But the stock in front of you, MRNA, is the textbook 5-star episodic pivot. And before I go into the deeper dive of this, for the beginners here, for the basics, right, y'all want to know what is an episodic pivot. And I have a video on my YouTube page, I'll link it below. Well, I didn't want a case study in the past, but this one meets all the criteria, 5-star, which is why I'm doing a video. So what is an episodic pivot? Again, everyone has their own definition of an episodic pivot. There's three main points: catalyst, a gap, and volume, right? But pretty much, I'll go over each of these in a minute, right? But my own definition of it is pretty much think of it like a movie, right? It's the climax of the movie. It's a change in the company's outlook to say, right? And the number one thing you want to look for is a catalyst. Now, the one in particular today, mRNA, is a biotech. You have biotech EPs, you have earnings EPs, and you have other ones like contract or partnerships, right? The main premise is you want an unexpected news event, right? Mainly on a stock that's been going sideways, right? And that's number 4, a base, okay? We'll go over each of these in a minute, but first, catalyst, gap, volume, and base, okay? Catalyst, you want something, as I mentioned, you want rocket fuel. Again, most traders, their problem is in the beginning is not knowing what to trade. This particular setup, you don't have to try to find a stock, okay? All you have to invest in is a stock screener. Use FinViz, right? It's free. Obviously, you will want to pay for this. They have pre-market scans, or you can use whatever you want. But find stocks that are gapping up. You want stocks that are gapping up on news, either one of them. Again, biotechs are often, earnings winners EPs are often the best, and we'll go over those in a minute, okay? But this video, mRNA, FDA news, okay? And what was the news? They met primary endpoints. And in biotechs, that's the main point. You always want to find a stock in a biotech, right, that has EP. That's the keyword. Keyword right here is endpoint. Pretty much what that means is that the trial was successful, that they, in a sense, achieved their goal in that trial, right? If this would have said did not, then that would have been bad, okay? So this is the positive news with a cancer drug, okay? Positive news, 5-star, unexpected, right? Unexpected to the market, right? Because the stock has been in a big base for a while, a big base. But that's the number one thing. I want to get this in your brain. If a stock's gapping up with no news, that's not an EP, okay? The first thing you want is a catalyst. You want news, positive outlook. It's like rocket fuel, legs. And the best ones are earning winners because they have positive growth, positive year-over-year growth, positive expectations on the outlook, along with biotechs, okay? Because again, most biotech EPs, you have to think in terms of logic here. I'm talking on the larger cap biotechs. Of course, you have smaller and nano cap biotech EPs. Those often dilute because, think of it in this way, okay? The only reason to become a stock is to raise money, okay? And biotechs often, most of the time, these companies will raise money whenever they have a stock that is inflated, because these trials are not free. Okay, you have to take money away. You have to earn money in a sense. So they raise money to survive, right? And we'll go over examples of that in a minute with some biotech EPs that I'm talking about that pretty much have not been going as I've expected. But as a trader, your goal is to really understand the different nuances between a biotech EP, an earnings EP, and regular like low float EPs. The best ones are the ones that are neglected, okay? And I'll go over those in a minute, okay? I have a whole database here, which I'll go over with you. If you enjoy this, keep on going, right? But biotechs, they release all the data on the day of the news. So that's your edge, right? And the only downside is if they raise money. But if the news, if the stock is like a larger cap, like institution worthy, like mRNA, they likely will raise money, but like think in terms of supply and demand. This traded roughly 20 times the average daily volume, 200 million shares, and that's another key point, okay, we talk about. But number one, again, you want a catalyst, you want a rocket fuel. Don't just say a stock that gaps up is an EP. No, you want a catalyst, you want earnings, or FDA approved breaking news, or a partnership, or a contract, in hindsight, in a nutshell, you want like unexpected news that has legs. Think of it as a movie. A movie. Outlook, a change in the company's outlook, okay? Number 2, the gap. As I mentioned, you want a stock that gaps. You don't want a stock that just gaps into overhead resistance. The best ones, like MRNA, right, has been basing for months on end. And this is why this is a 5-star setup. 5-star. Now, always look left, okay? Look left. I always say in every video, this has gone in the past during COVID times, right? As you can see here on the chart. And ever since then, it's been neglected, right? And the best ones, as I mentioned, the best EPs are neglected. Like we had on Roots a couple years ago. This was a small cap earning ones. 5-star off the EP here, even here. And another one recently, PLTR is another one, numerous times in the past, okay? And you always have to look at stock charts, okay? Even INTC, okay? The best ones are going to offer numerous entries along the way, okay? And we're going to go back to these charts in a moment, so forgive me if I'm going fast. Don't worry, we're going to do a chart case study, okay, of all of these. But the best ones are going to be neglected and have ran in the past and have gone sideways, right? The big base, as you can see here. For this whole year, it was making a big base, and it gaps up over these moving averages. You don't want a stock that has earnings, right, and gaps up into these moving averages, okay? And I mentioned, the bigger the gap, the better it is, because it's unexpected, right? And I have the 10, the 20, and the 50-day moving average on my trading software. Again, you can do whatever you want to do with it. That's just how I trade. But let me show you an example of like a stock that gaps into a moving average. If I could pop up my screen here. We even like, which one? Amazon recently. Amazon. Well, this is an example of one that's fading. I'm trying to find the one that gapped up. Let me see here. There's a lot of them. But pretty much the best ones gap up over their ranges, right? That's the point here. You don't want to buy a stock EP that gaps up into these moving averages. That's not an EP. It can work, but the odds are very unsuccessful, which I have tracked over the course of my trading career, right? And the best ones are neglected. I'm trying to go through my scanner here real quick, the ones I'm watching. Airbnb is a 5-star one. We'll go over that later on in a minute. But I can't really find, it's a bad example. But the point being is you want it to gap up over these ranges, right? It wouldn't have worked. Let's say, for instance, this was consolidating, right, for months, and the moving average, let's say, for instance, the stock was on a downtrend, right? And it gapped up into these moving averages. Like, we're gonna just look at the long-term chart here. Always look at the past, right? Always look at the past. The past always provides numerous examples. Let me see here. Well, I don't really see that many. Let's see here. The point is like this day here, in a way. Well, not really. It's a bad example, but you hopefully understand what I'm trying to say here. Like, the best ones gap up over that resistance level, okay? If these moving averages, like the 10, 20, and 30, if they're sloping down, right, and if the stock gapped up into those, that's resistance, that's downward pressure. The odds are very high it's gonna fail. But the fact that this gapped up over the big base means it's 5-star. So, catalyst, a big gap up over that resistance, over the big base, okay, that we went on number 4, over the big base, okay? You don't wanna focus on stocks that are below that, right? If it gaps up into the moving averages, the odds of success is low, okay? And the most important one that most people do not pay attention to is volume. Volume tells the sign, okay? Because volume shows you where the big players are going. Volume shows you where institutions are buying. Again, you want people buying the stock. Again, it goes to number 1. Number 1 and number 3 are the main key important factors, okay? Volume and catalyst. Because depending on how neglected the stock is, or the big base it has gone months or whatever, 6 months, a year, okay? When you have that gap, you're going to know. And you would know out of the first hour or even 15 minutes of the market action that the volume average is going to be higher than the daily average. And you can do it in your head, you know, like MRNA, right? The average volume was it's called 7 million average volume, right? Again, this is roughly estimates, okay? 7 million. Today's volume was 200 million, so almost 20 times that, right? And that's what you look for, because again, institutions are buying this. Do you have a reason for this to go up? Again, the only reason to be in a stock is for it to go up, okay? And you need legs. I call it rocket fuel. So always look for volume, and you will know based off the chart. This is 5-star, okay? Even if you go on the weekly for the past 10 years, you know, since COVID was a crazy time. I remember the stock was doing crazy numbers. Look at COVID times, you know? The volume, look at the volume. It's nearly almost at that level. And ever since then, right, this was during COVID here. This entire run here was COVID times. Time to be alive. And look, ever since then, it's been on a decline, right? And what do you see here? Okay, a big base and a range break. 5-star with volume. This is the best setup if you have a full-time job. And let me tell you why. Because number one, I already had a video on it, day trading versus swing trading. With day trading, you're always fighting near your entry, okay? I'm not saying you can't make money with day trading. I'm not going to down talk day trading. Yes, you can. I've made money day trading. But with this particular setup, right, in day trading versus swing trading, day trading, you're always fighting near your entry, okay? You're always fighting near your entry. And I'm not going to even talk about day trading. This video is specifically about EPs. But with EPs, you have specific rules of how to trade, or how I trade them. And I want to show you how I trade it, because the patterns never change, guys and gals. Okay, this setup is a timeless setup. But before I go into charts, let's go over this one more time. Number one, a catalyst. You want a reason for something to go up. You want, if it's biotech, you want positive FDA news, or even sometimes earnings. It's probably a combination of both, right? Sometimes on earnings with biotechs, they release some positive data. Could be a combination. And earnings, EPs, regular on other listed companies. You want positive year-over-year growth. You want positive sales, and you want positive outlook on the company, okay? And of course, other ones, contract or partnership, okay? And the main premise, the main nutshell in one line is a company forward outlook change. Think of it as a movie, big climax change, right? And the most important factor as well is volume. You want volume. If there's no volume, I don't pay attention to it, okay? Because volume tells a sign. Volume shows you where the big money's at. Volume shows you where the institutions are at. That is the only reason why I get involved, is the volume, okay? If there's a catalyst, if all these criteria meet but there's no volume, I will likely not trade it, okay? Number three is very important. Volume, okay? And the base, okay? Gap up over the ranges. You want the bigger, the longer time frame of the consolidation, which we'll go over in some charts here. I want to keep this video short, because the longer it is, the less I'll watch it. But I want to keep this video is going to be solely on episodic pivots, okay? But I want to show you some charts in my database, and we'll go over the examples, okay? But the bigger the base, right? It could be 6 months, it could be a year. The best ones have an EP, then they base for a couple months or a year, then they have another one, right? Those are the best ones. But the main point is you want it to gap up over a range, not into overhead resistance, okay? That's the main point, okay? But yeah, so back to my saying how this is the best setup for any trader, okay? Now again, the reason why, because number one, here's how I trade it. I wake up, right? I see the list of stocks that are gapping up, and I look for earnings. I look for what's gapping up. Why? Always ask, why is a stock gapping up? Don't just buy randomness, because that leads to random results, and you're likely going to lose money. No, my goal is to help you not lose money, okay? So always ask the question, why is this stock gapping up, okay? I saw this gapping up. I knew immediately it was a 5-star. Number one, we talked about this already. Big base, okay? We talked about big base, look at the volume, right? And I don't trade pre-market. I rarely do. The odds are really not on my favor. I track statistically wise in my trading career, me trading pre-market. I don't do it. You may be successful at it. I'm not. So I don't do it. I'm not going to do what I know I'm not best at. If you trade pre-market, go for it, right? In hindsight, this would work, right? Getting off the lows here. But with this strategy, what I wait for is the first 5 to 10 minutes of market open. You really want to get in the first 15 minutes of that time. The longer this goes away from market open, you're going to have higher odds of not being successful. You want to get right in right away. FIFO, first in, first out, right? And I waited for my entry. I timed it perfectly. I waited. Obviously, we had this nice dip. I used 10-minute, but obviously some people use 3-minute, right? I pretty much waited. I didn't buy it right away. Okay, I got long pretty much at 130, not even 126. I got long. And the thing is, right? You wanna, with this entry, this is why it's so perfect. You let the stock work for you. Again, trading is all about thinking in terms of odds and probabilities. That is all. You do not have to try to be right all the time. Most people cannot cut their losses whenever they're at their exit point because they have their ego. They want to be right. That is a wrong mindset to have, okay? You don't have to try to be right all the time. Your goal is long-term survival, but that's a different topic. With this entry, I have my set point, right? Opening range highs. Low of day is stop on this methodology every single time. Low of day is stop. Okay, you can pause, and this is what I have. I've written this here. The low of day is going to be stopped. The low of today was roughly, what was the low, Victor? 114 was the low. Okay, I got long. I can see here. Well, let me see. Never, I had a better average than I thought. I got long at 119 is my average, and risking 114. Okay, I got it, and I was patient the entire day. And I know some traders who sold along the way here, but what I'm trying to show you is like the big money, right, in swing trading is holding these for longer term frames. And with this setup, this is a timeless setup, okay? But back to the end, you want to buy it, right? Get full size already, and low of day is stop. And sometimes, okay, sometimes you will get stopped out. And I'm not saying that like if you miss this the first hour or whatever, you don't have a chance to buy this. No, what I learned though is like, this is an outlier, right? This is a person example. The average true range is $11.50, but today's an outlier because it gapped up quite a bit over the range. But you really don't want to buy it. You want to buy it on a dip, okay? You don't want to buy it here, buy it on the dip. This would have been a perfect entry on the VWAP right here, right? But obviously the best time to buy it was where I told you. This is at the higher risk to reward setup here. You have a clean risk off low of day. Clean risk. And 119 was my average. I'm still long. This would be a swing trade. I know some traders who sold this, which is cool. But like this setup, I've noticed, I've tracked, right? Works flawlessly. And I'll show you. And again, setup, entry point, low of day is always stop, okay? You don't want to have a stop wider than the average true range. And what I mean by that is, as I mentioned, like the average true range of a stock, okay? As I mentioned, we'll go over some right now, other biotech EPs. If the stock, for instance, like a perfect example is IOVA, right, has been a recent biotech EP, 5-star galore. They offer numerous entries. This is why you always want to have a longer term outlook. This is why this is more superior to day trading. This is where the real money is made, in my opinion, because you have a longer term outlook and you have an edge. You have a setup here, right? And these are the biotechs: MRNA, MRVI, BNTX is a ETF. IOVA, I went over. ALMX is one that is. This is what a pure EP does. Continuation. ABCL, OEMR, setting up nicely, XBI, and RCEO. Okay, the best ones have a big base, although these are much smaller cap names. These are for like smaller cap. This is like for small account edge, but the setup's still valid. And I talk about this on the channel all of the time. Okay, the best setups make numerous moves, have the first initial move, they go sideways, right? Then they have that clean range break. And we're going to go over some charts from my old database again. So if you're kind of confused, don't worry, okay? But Iowa, right? Look left. I mentioned in the past, the best ones often have a previous earnings EP. And look left, right here, okay? Earnings, volume, right? First initial run, pullback, on the moving, basing in a clean range break for that expansion. Clean. And recently, this past month, we had that same exact scenario here. Same exact scenario here. Volume, okay? Look at the volume. Volume, and the gap, right? Gap over these moving averages, okay? It's not gapping into them, it's gapping over them. And the best ones, I like to call them a delayed reaction. And with that, what I mean by that is this right here. Okay, sometimes the best ones sometimes have to accumulate. You know, their earnings are not, everything's about expectation in the market, okay? That's what the market is, expectations. The best ones pull back in some area, in some sense. You know, had a red day here and it had accumulation in a sense. Again, this is a smaller cap, but the volume is still there. And look how it held beautifully here. I missed this, but this is a 5-star setup. Congrats on that one. ABCL, another one, biotech, long-term chart here. This is what I do. This is the process of how I find EPs. These are biotechs here. This is another biotech. Again, look at the volume. And in every one of these, I want you to understand one thing. Stocks move in stairs, okay? They always will, they always have. Human nature never changes, okay? The best, again, I want to say this one more time, the best entry is on the first EP day, but most of them we're going to offer numerous legs, numerous entries. And the higher they go, you don't want to buy. And the sell strategy here is you want to sell some along the way, but as well trail, lock in some the third day, and trail the rest with the 10-day moving average, okay? W is another one, NIQ is another one, HNST, for instance, this is an example of an EP that this is what I call a mean reversion long EP. Most of them do gap up, right? But sometimes they fade. Look left, sometimes they fade. Sometimes, this is a perfect example, it's not exact science, right? But it's in its blood. It has gone prior. Look left, right? Always look at the long-term chart. This has gone linear before. But just because it's done that before does not mean it's going to do it again, right? This gap up was a nice gap up of earnings. Volume was there, but it faded. But always keep these on a backlist, okay? Because look how it's basing on these moving averages. With these earnings EPs, sometimes it takes a while for them to form a setup, right? The best ones, the best EPs go from day one, like MRNA, right? And another one recently is our Ring. The best ones just go, right? The best ones really don't give you an opportunity to get long. And this is a perfect another example. Recent earnings winner. Look left here, right? Gap up, a big base for months. Then I had another EP off earnings earlier this month. So Ring, 5-star, you know, big base, volume, gap up, right? And I mentioned the best ones offer numerous entries. You want to get in the first EP day, right? The first day off the EP day. But again, the best ones, and I'll show you here, offer, most of them have a pullback day, right? And that's when you want a secondary entry or an ad, whatever you want to do. But most of them pull back, right? And have this first red day, or sometimes it's 2 days, right? That goes sideways, then it goes again. Those are the best ones. Those are the best ones. And you want to buy it just as it's breaking off that range. Again, the best time to buy it is the first range day, EP day, but most of the time they offer numerous ones. And you don't want to buy it now, right? You don't want to buy like, these are not range breaks, okay? That's when you sell into. I'm trying to show you the perfect time to buy these and how these work, okay? Trail 10 day with this one. That's the setup here. Trail 10 day, whatever is left. That's the strategy on that one. And even this one right here, okay? Look at the setup. It's setting up very well. It's a high type flag here. Sometimes the best ones, right, don't really just go. They offer setups from the EP day. But my goal is to show you what an EP is, right? Shop, for instance, had all the characteristics of it, the volume, not that big compared to the past, not abnormal volume, right? But gapped up, and it pretty much tried, but it faded, okay? It faded. And that's not a characteristic of a high quality EP like MRNA today. I'm trying to show you what a 5-star one is. 5-star. the perfect example I can show you on my database from last year, for instance, was CRNC. This was a 5-star EP, very similar to the one MRNA today. 5-star galore, okay, 5-star. 5-star, 5-star. Congrats, I traded this. It was my best trade of 2025. Big base for a month off the first initial EP day. Then you had a massive gap up. And again, volume. And you get long, right? I got long, the first opening range high here. And yes, it did what it did, right? This is the basic premise of this setup. You want to take advantage of the forward outlook of this stock here. And I have this in my database right here, okay? 5-star galore, okay? As I mentioned, you want to wait for the first 15 minutes or so. Because look, you had that opportunity to buy it. Opening range highs, low of day, and look what it did, you know? That's the basic setup I'm trying to show you here. Hopefully all this made sense. You know, I have a lot more in my database here that I can go over, but if you like this video, drop a comment below and I'll go over a database. Well, your job is to keep a database of stocks, okay, of a particular pattern that you want to trade, and you become a master at that, okay? Here, right in front of you, 5-star, okay? Volume, okay? But I'm not going to go over all of these, because the longer the video, the less that will watch it. My goal is to show you one of the highest odds setup in the entire market, okay? All you have to do is find a stock that gaps up with, not any stock that gaps up, find a stock that gaps up with news, okay? Whether it be a biotech with positive trial news, whether it be earning news, positive earnings, right? Catalyst, partnership, contract win, whatever it may be. You find that, and everything's about the reaction to earnings. That is what it is about, okay? And that's another 5-star. Eliminate 5-star examples. I have thousands, but if you want to see all these, drop a comment. Maybe I'll make a video going over all this detailed more. But one more time here, okay? MRNA, 5-star setup. It checked every box in an episodic pivot trade. Volume was there, the gap was there, the news was there, okay? But 5-star galore. But one more time, EP basics, catalyst, a gap, volume, and a big base off that, okay? But other than that, I will see you next time. Again, always focus on this one particular setup that you can trade. If you have a full-time job, it works wonders because you don't have to be always fighting near your entry. You can buy, you can have a set sell price, and you can have a set exit place. And this is why, in my opinion, it's the best strategy out there. But other than that, like, subscribe, drop a comment if you want more of these. I'll see y'all next time.